Hello, everyone. I want to start to teach you series of lessons to learn foundation of financial accounting. This first video explains basic concept in accounting. The concept is called double entry. Double entry is about making transaction as first and essential component. When accountant records a transaction, the transaction affects two accounts. One account will be in debit side, or left side, and another account will be in credit side, or right side. Double entry transactions always include number in debit side and credit side. In addition, total amount in debit side should be equal the total amount in credit side for each transaction. The transactions will move through the accounting cycle until finally end in financial statements. These financial statements in for-profit organization is published in the public in the end of year. The financial statements are income statement, statement of retained earnings, balance sheet and statement of cash flow. To understand double entry concept, we should understand accounting equation, which is assets equals liabilities plus stockholders' equity. Assets, liabilities, and stockholders' equity consist with many accounts under each one. In assets, it always increases with a debit side and decreases with a credit side in all its asset accounts, whether current assets or long-term assets. In liabilities, it always increases with a credit side and decreases with a debit side in all its liability accounts. Stockholders' equity consists of 5 main components with similar characteristics. The first component is common stock. It increases with a credit side and decreases with a debit side. The second component is retained earnings. It increases with a credit side and decreases with a debit side. The third component is dividend. It increases with a debit side and decreases with a credit side. The fourth component is revenues. It increases with credit side and decreases with a debit side. The fifth component is expenses. It increases with a debit side and decreases with a credit side. Let's look to the income statement in the video and see the effect of double entry, or debit and credit, on each account. Revenues are total amount earned from sales which are paid by customer or to be paid by customer in the future. Revenues increases with a credit and decreases with a debit. Sales discount increases with a debit and decreases with a credit. Cost of goods sold is literally cost of inventory or service. Cost of goods sold increases with a debit and decreases with a credit. Gross profits or losses equals net revenues minus cost of goods sold. Gross profits are in credit side and gross losses are in debit side. Selling and administrative expenses of all accounts increases with a debit and decreases with a credit. Our examples are selling expenses like salaries and wages, advertising expenses, delivery expenses and utilities expenses, and administrative expenses like salaries and wages, renting expenses and depreciation expense. Operating profits or losses equals gross profits or losses minus operating expenses. Operating profits are in a credit side and operating losses are in a debit sides. Other revenues and gains and other expenses and losses are considered as non-operating transactions. Other revenues and gains increase with a credit and decrease with a debit. Other expenses and losses increase with a debit and decrease with a credit. Income before taxes equals operating profits or losses minus other revenues and gains and other expenses and losses. Discontinued business gain or losses. Discontinued business gain increase with a credit and decrease with a debit. Discontinued business loss increases with a debit and decrease with a credit. Extraordinary gains or losses come from infrequent and unusual transactions. Extraordinary gains increase with a credit and decreases with a debit. Extraordinary losses increase with a debit and decrease with a credit. Non-controlling interest is a portion of income that related to non-controlling stockholders. Non-controlling interest increases with a debit and decreases with a credit. Net income increases with a credit and decreases with a debit. Net loss increases with a debit and decreases with a credit. For statement of retained earnings. We use this statement to update the retained earnings by adding the net income or net loss. Retained earnings increases with a credit and decreases with a debit. For balance sheet. Let's start with assets. In current assets, cash increases with a debit and decreases with a credit. Account receivable is cash owed to a business. Account receivable is expected to be paid to our company in the future. Account receivable increases with a debit and decreases with a credit. Allowance of doubtful account is estimation of uncollectible account receivable. Allowance of doubtful account increases with a credit and decreases with a debit. Inventories increases with a debit and decreases with a credit. In long-term assets, building increases with a debit and decreases with a credit. Land increases with a debit and decreases with a credit. Equipment increases with a debit and decreases with a credit. Accumulated depreciation is a reduction of the value of the long-term assets. Accumulated depreciation increases with a credit and decreases with a debit. Intangible assets increase with a debit and decrease with a credit. Current assets plus long-term assets equals total assets. The second part of balance sheet is liabilities. Account payable increases with a credit and decreases with a debit. Unearned revenue increases with a credit and decreases with a debit. Accrued payroll increases with a credit and decreases with a debit. Income tax payable increases with a credit and decreases with a debit. Dividend payable increases with a credit and decreases with a debit. Current liabilities plus long-term liabilities equals total liabilities. The third part of balance sheet is stockholders' equity. Common stock increases with a credit and decreases with a debit. Preferred stock increases with a credit and decreases with a debit. Retained earnings increase with a credit and decrease with a debit.